So for those of you who don't know me, I'm Mark Townsend. I'm with AnnieMac Home Mortgage. I don't even want to tell you how long I've been in the business. Probably been in the business longer than some of you have been alive. So it's been a long time. This is Jasmine. She's my loan partner. I'm just the eye candy. She does all the work. So she does a great job and behind, following up with your clients and whatnot. But today we're going to talk about cash to keys. Okay, this is a program that's pretty much changed my whole way of looking at real estate. Everything that we're going to do today, we're going to send you information on. We're going to send you. Actually, Carl has a copy of the presentation. We're also going to send you all the support information. We're going to send you marketing information. We're going to send you videos. Got all kinds of neat things that we can actually give you to help support you, to help you go out and build your business. So I'm a banker, so I'm here to show you the money. All right, we'll go on to the next one. All right, so cash to keys. Cash to keys was the brainchild of our CEO, Joe Panaviaco, who is going to be in Connecticut in June, and I'm going to invite you guys to come down. We're probably going to do it down in Wallingford, and we're going to have a big presentation. It's going to be for Connecticut and Massachusetts agents. He's the CEO. You're going to want to take your day off that day and come down. It'll be a great party. They put on a great spread as far as food and whatnot, but more importantly, listen to Joe P. This guy is the smartest guy I've ever met. And it's not because I worked for him. It's just the guy is brilliant. Every time he says something, I learn something different. But anyways, he came up with this idea, and he started a private equity fund about 2 years ago. He saw this market coming. Before he got into mortgages, he worked on Wall Street. And he got together with a bunch of guys, and he said, you know what? There's going to be an inventory problem nationwide starting in 2021. They put together Cash to Keys. Cash to Keys is a private equity fund that backs all of our conventional and VA clients. Right now, we're only doing conventional and VA. All their purchasers are backed with cash. Okay? Go ahead. All right. We do have a real estate certification course, which is basically what we're doing today.
I took it.
You took it?
Yeah.
All right. You could actually probably, right? So, and listen, the certification is good because we're going to send you a little QR code at the end for you guys to fill out some questions. You can take it as many times as you want to, so if you don't pass it the first time. They're all pretty easy. You could probably attest to that. But listen, the reason we want to get you certified is because when you go to write these deals, it's going to be a little bit different than the way you do business right now. Your contract's going to be different. So we want you to kind of understand that. But the good thing is we're there to help you all the way through it. Okay. Go ahead. All right, so there's two parts of this program. There's cash offer and buy now, sell later. So your clients that don't have anything to sell, either they're first-time home buyers, putting 3% down, 100% financing, VA, or maybe it's somebody that has a home, but they can qualify carrying it, they're going to go through the cash offer program. Buy now, sell later are those are the people that we're really using to try to stimulate in the real estate market. Those are the people that right now are sitting on the sidelines, but because they're telling you, I'd love to sell my house, I have no place to go, right? I'd love to sell my house, but I can't put an offer in because it's a Hubbard clause. That's the answer to your question right there. Okay? All right, go to the next one. All right, so we're going to go over cash offer first. A couple real things. Obviously, I don't have to tell you the difference between cash offers and contingency offers in this market. You guys know, right? One closed cash offers, steps of a cash offer transaction. We're going to kind of go through that. Cash offer fee and its refund, contracts and properties, and cash offer agent certification, those are things we're going to talk about today. All right, sellers love cash, right? It's a different offer when you go in there with a mortgage contingency. By the way, anybody on a conventional pre-approval, what's the chances of you getting that offer accepted in Connecticut? Any idea? Joe Pete knows. Joe Pete did the research. He told us the other day, 20%. 20% on a. What's the chance of getting a cash offer accepted? Anybody want to guess?
40%?
80. Now, I don't know that it's that high. I think it's more like 60 or 70 because you could still have a cash offer and get outbid. But he said it's 80%. And he looked at the transactions out there. Okay. All right. Again, do you prefer representing a client that has a cash offer or somebody that is under contingency?
No chairs.
I'll
Yep.
give it to
Yeah,
you.
just grab one, pull it right in the,
Yeah.
right in the doorway.
So again, this is, again, National Association of Realtors. Cash purchasers make up about 33%. This is an older slide. I think it's actually gone up, not down. So, and then partnering with a lender who's affiliated, a leveling playing field with the cash offers. Okay, go ahead. All right, cash offers. Let's skip this slide real quick. I want to get to the, okay. So why are we doing this? Right? Why is AnnieMac coming out, putting money out of their own pocket to help you sell real estate? Because if you don't sell real estate, I'm not writing mortgages, right? Lou Tolano's not closing deals. Your home inspectors aren't getting any deals. The appraisers aren't working. And the insurance people are writing car insurance, not homeowners insurance. So we want to do something that's different. I mean, every lender that comes up to you, they tell you three things. I got great rates. I got great service. I got great products, right? Remember Charlie Brown? Remember he used to call his teacher on the phone? Remember what his teacher used to say? Wah, 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 wah. And listen, I was just as guilty as everybody else. I would come out here and tell you, oh, I'm fantastic. I'm doing this. But what am I really doing to help you? Nothing, right? Does a low interest rate help you sell a house? No. Does some programs help you sell a house, right? You know, CHAFA is a great program, but we wanted to do something different. And this is just one of the many things that we do. We're going to get you guys approved. We're going to get you at the broker level. We have all kinds of classes for you for staging certification, renovation certification, credit certification, zero cost to you, right? The philosophy behind AnnieMac is doing something that's going to help you sell real estate. Because if you're selling real estate, I'm writing mortgages. So we're kind of, it's like a partnership, all right? All right. How does it work? So we'll get into the guts of it right now. Okay. Whether you're going cash offer or buy now, sell later, starts with an approval, okay? Our approvals are full mortgage approvals. So the problem is, and I'm going to tell you this like 5 times, you can't call me up today saying, hey, I got Mr. Smith and we're looking at the house tonight. Can I get a cash offer approval? It's not going to happen. This is the full underwrite. So what we do is we contact the client. We get all their income, asset, credit information. If they're getting a gift, we get the gift letter. We get the money in the account. If they're using leases to offset debt, we get the leases and the deposit. Everything's in. So on this deal right now, it's running about 2 to 3 days for an approval. So it's basically an underwrite on steroids. All right, they're doing it very fast. That loan gets approved. If your client says, hey, I'm really looking at around $300,000 sales price, we're approving them at the max they can go, right? Because are the taxes different in Glastonbury than they are in Coventry? And are they different, in Columbia and in different towns? We want them prepared so whatever they find, it's easier for me to lower the price than it is to go up, okay? So we get the approval, loan comes out of there, we automatically back that with cash. So you have a client, $400,000, putting 3% down, loan's approved, okay? Backed by cash. At that point, that's your insurance policy. Loan's gonna close. As long as the appraisal comes in, as long as the inspections come in, loan's gonna close. Guy loses his job, still buying the house. Guy has credit issues, still closing the deal. Different than a pre-approval, right? You're gonna actually be contacted by a home purchase coordinator. When do you guys do most of your business? Like what time of day? Is it in the evenings?
All the time.
Midnight.
Do you do any,
Yeah, 2 in the
do
morning.
you do any transactions on the weekends?
Yeah.
Of course, yeah.
Okay. Home purchase coordinators on the job at 9 o'clock in the morning till 9 o'clock at night, Mondays to Fridays, 12 to 5 on weekends. I do 60% of my business on the weekends. You gotta have people available. We have underwriters on staff on the weekends, all right? We'll tell you some stories later on about how we got deals approved on the weekends that just will blow your mind. So home purchase coordinator reaches out to you and reaches out to your client. They're going to tell you how to write the deal. They're gonna walk you through some of the forms that we're gonna send to you. We're gonna give you everything up front.
What are the conversations that they're having with the client?
With us?
With them to the client? What
They're
are the
good. You're actually great question. So they're telling the client, what are your next steps? When you find a property, just send over a copy of the MLS to us so that we can approve that property. And what they're looking for is a couple of things. First of all, we can't have properties that have over 10 acres. This is for single units only, owner occupied. We will do second homes. Okay, so if you have a client buying a house in Florida or down in the Cape, we'll do those. No exterior obsolete. So not looking for renovation deals. Okay, it's got to have, and it doesn't have to be perfect. We're just saying in good condition.
Do you find the clients overwhelmed after those calls?
No, I think they actually really like it.
Okay.
But you know what? I'm sorry,
Because
what's your
that's
name?
a lot of conversation.
What's your name?
Laura Beth.
Laura
LD.
Beth. So in between here,
Yeah.
great idea for you, your client, and me to get on a Zoom call.
Okay.
All right, or even up here.
Yeah.
Zoom calls. I mean, listen. One thing out of COVID that came out of COVID was Zoom calls, right? We jump on a call with them and go through everything with them. But that's exactly what they're going to tell them. We're going to say, hey, this is how we're doing things. This is your next step. This is what we're going to expect for you. They walk you through everything. Okay. But you're right. But the other thing it does, it gives you another person to contact. So you have myself, you have Jasmine, you may have Jana or Donna or Colleen. These are three people who kind of handle Connecticut. Those people are there to help you out. Okay. So once you get done with the welcome call, they're telling you how to set up your offer. You find a property, right? And then in between here, before you make the offer, you're going to send the MLS over just for them to take a look at it. 15 minutes to say it looks good. They write up your offer, you make the offer. Okay? Cash offer. This is where I get involved because 9 times out of 10, the listing agent's not going to know what's going on. What the hell's this cash to keys thing? Right? It's an opportunity for me to educate them and get them on board as well. The more people I can tell them about this, the better off it is, because if you happen to have the benefit of having somebody on the other end that's gone through this, oh yeah, I love this program. I'll give you an example. You guys know Denise Webster from Keller Williams?
Yes.
Okay. So anyways, she had an offer. She was working with Pam Moriarty over in Caldwell Banker. They have their in-house lender. I did the presentation for Caldwell Banker. They weren't real hyped on it because the mortgage guy was sitting in the room and he was like, oh, this thing sucks, this is terrible, whatever. And he tried to punch holes in it and he couldn't. So out of that meeting, we put an offer in. Pam goes, oh, that's that program you went over. And I said, yes. 5-minute phone call, accepted the offer. Client bought, the offer was accepted. So educating the more people I can tell them about, the better off I am.
And that actually happened with me too, because Denise
Yes.
sold 74 Pokey Park Drive.
That was one of the first ones we did.
Yeah, and that was buy now, sell later.
It was,
right?
yeah.
And so you called me and
Yep.
explained it to me, and there was multiple offers.
I forgot about that. Yeah, thanks for.
Yeah, and that's how I learned about that's how I learned about the program, and it was.
We closed that one quick. It was one of
Easy.
the. Yeah.
Yep.
So the offer goes in. So now your offer is accepted. Okay. 9 times out of 10 on a cash offer, we're going to close with the mortgage that we have them approved on already. Almost always. All right. However, what happens when something pops up on their credit? What happens when somebody gets laid off from work? What happens when the situation changes? If somebody gets laid off, they still want to go through with it. We'll buy the house. They get the job back. They'll buy it back from us. Okay. Or let's say that the wife said, I don't like the house anymore. I want to pull out of the deal. Well, they're going to lose their deposit anyways, probably. Cash to keys will step in and buy the house. Everybody gets paid their commissions. Deal went through. They'll turn around and resell it. They'll turn around and put it back in the market and sell it. That's what I'm telling you about. When this thing gets approved, it's
Using
going
us.
You know
What's the
what?
listing? Nice, big.
Always thinking, man.
Yeah.
You know what? I don't know who they use. Huh?
You didn't answer.
I don't know. I don't know how they did it, but I will tell you this situation happened in New Jersey.
Yeah.
Because this whole thing, when they started this program back, it really started early 2022. We didn't get any in Connecticut until late 22, and they were doing the beta testing in New Jersey. They had this situation actually happen. The guy bought the house. They were moving from Iowa or someplace in New Jersey. The wife gets there. She absolutely hates the house. So he tried to sabotage the deal to get out. Well, he lost his deposit. We stepped in and bought the house. I don't know who they relisted it with, but you know what? Why not? If it was up to me, I'm going to go with you guys, right? Because you're the ones, if you refer me the client, I'm going to try to refer it back. So if I have any say in that, yeah, you'll get it back, all right? So either way, this loan's closing, okay? So this is your cash offer, 2 to 3 days, you're ready to go on this thing. But again, I can't emphasize enough, get your clients in ahead of time. Even if they don't want to use it, you know how much this all costs you? Zero. Doesn't cost them a nickel. There's no obligation. I don't have to hard sell this anymore. We're getting slammed. I mean, we're doing 15, 20 of these a week. Okay?
So Mark, let me ask you a question.
Yeah.
You you go through this process. The buyer loses their job.
Mm-hmm.
AnnieMac still buys the house. We get paid. Everything's great. Do they rent it to that person, or is
They could do a rent back to them, but they won't. Usually what they do is say, hey, listen, are you able to secure a job within a 60
certain
day?
amount of time?
Now, on the next deal, we will rent it on the buy now, sell later. Yeah.
That's the rent
Yeah.
part. Okay.
This
But
one,
that
if-
works out between the buyer and AnnieMac if they still go to
Yeah.
purchase it or whatever.
So I'll tell you, my nephew is in the Navy. He was buying a condo in Florida. Put the house on the, and believe me, the agent I worked on down there was terrible. Didn't know what he was doing. Anyways, long and short of it was, my nephew ended up extending his stay in the Navy. So he wasn't able to close on time. So they wanted to get out of the deal. So they were threatening my brother-in-law, threatening my nephew. They're going to sue him. He stepped in and bought the house. Realtor shut up because he got paid, right? They put it back on the market. We did not use that real estate office to list it, all right? There's another office we had down there that we referred it to them. They put it on the market, sold it one day, right? So, in that case, what they'll do often is they'll keep, and I'll tell you about the fees and stuff like that. They'll keep the fee on it because they have to have money when they resell the property, okay? So go on to the next one. Okay, so the approval process, again, they refer to it as a pre-approval, but I'm here to tell you it's a full mortgage underwrite, okay? Go ahead. Welcome calls, you kind of went over this. These people, the home purchase coordinators, will be your best friends. You'll love them. They're awesome. Whether it's Gailey or Colleen. Colleen works 7 days a week, 12 hours a day. They are phenomenal, all right? And they actually not only educate your clients, but they walk you through everything that you need. And you can actually contact them anytime with any questions. Go ahead. Okay, got the offer. Go ahead with that. All right. So this is a cash to keys offer addendum. All right. So a couple things that you're going to notice on this form. We're going to send this over to you guys so you can take a look at it. All right. So now that it's a cash offer deal, there's no mortgage contingency.
So does this go with the offer?
Yes.
Like, so you have a regular, let's say, GAR contract offer, and then this is an addendum that you attach
Correct.
with
Yeah.
that? Okay,
Yep.
got it.
And,
So-
and the mortgage part, you would put mortgage and cash to keys?
No
So
mortgage. It's
you
cash.
waive the
Yeah.
So
mortgage
this would be a
contingency.
cash?
Deal.
Cash.
Yeah. So your front page, right? You're just going to have sales price, deposit, and there's no mortgage contingency.
And then you waive the mortgage because it's cash. It's a cash
Yeah,
transaction.
but there's still an appraisal.
Yeah.
Right.
Got it.
That's basically what this says. It says it's
Got it.
waiving the mortgage contingency. It's backed by cash, but there is an appraisal. It says
Yeah.
in there it's an appraisal or something.
Okay.
So it's fully underwritten. Cash.
Kind of like hard money, like where there's still an appraisal
Similar,
in some way,
but
different.
with a more traditional.
Yeah.
Okay.
And by the way, you mentioned hard money, but the difference here, there's no add-on to the rate or points. There's no extra fee for this. So you're probably saying, well, wait a minute, what's the catch?
So there's no fee for this to be cash.
And actually, hard money is still still a mortgage contingency.
It technically, right,
Technically,
right.
yes.
Yeah.
This is saying.
Yeah.
it's not.
Completely waived. Right. Got it.
So what they do is on a cash offer, and again, cash offer, and I'm going to give you this stuff broken down. Cash offer, when the offer is accepted, he gives the traditional earnest money deposit to the seller. Okay, let's say it's 1% or 1.5%. He's going to get 2%. He's going to give it to Lou Tavano's office. Okay, so Lou Tavano right now, right down the street from you guys, is the only approved attorney to close these deals in Connecticut right now.
Oh wow. So there has to be an approved attorney.
Has to be an approved attorney.
And I will say, Lou just called me on the way over here. He was going to stop in, but
Wow.
he's closed a ton of them, and he's like, it works. It's another tool in your toolbox.
Okay.
We got the Tavano stamp of approval.
Yeah.
Whoever's worked with Lou.
Yeah.
Will other attorneys be
Yeah, would you,
certified for this?
We can. So once we picked up, obviously when we start picking up more volume, because there's 4 of us in Connecticut right now, maybe a 5th coming on board. So we have 5 loan officers here throughout the state. There's another one downstate that's going to be approved. Now Lou's approved. He has an office in Fairfield. He has one down on the shore. He has one in Windsor Locks. He's also licensed in Massachusetts. So he can kind of pretty much handle that. But going forward, yeah, we will put some people on there. I will tell you though, if we add somebody on there, we're gonna need a firm like Tavano, because we need somebody that has a powerhouse paralegal, and Jessica's, again, Jessica does all the work, lose the eye candy, in 3 or 4 attorneys. Because when we get these done, sometimes we're closing these in 10 days, sometimes we're closing them in, 4 months. They're all over the place. So we need an attorney that is actually gonna order the title as soon as this contract goes together.
So why are you closing them? Why is that happening? 10 days and 4 months.
Because the seller may dictate, hey, you know what?
So not contingent on this.
No,
just in
no.
general.
It's just, it's
Okay.
all based on what the seller wants to do.
When you
Okay.
negotiate.
Right.
Yeah.
Yeah.
Okay.
Yeah.
But cash
Yeah.
goes fast.
Right. Okay.
Yeah. So the deposits that they're giving to Tavano's office is not a fee. They call it a cash offer fee, but what it is, it's fully refundable if you have the right to terminate, right? So if you do a home inspection, even if it's for information only, but you find out it's got crumbling foundation or something major's there, you terminate the contract, earnest money deposit and the fee with Tavano's office is fully refundable. Okay? And then, assignability, and that's gonna be important when we talk about the other program, but this comes in, you can see that buyer, seller sign it, also is approved by AnnieMac. So when you make your offer, there's no pre-approval letter, we're giving you proof of funds,
Right.
right? We're giving you a bank statement, has $1 million in it from cash to keys. All right, now with a cash offer, one thing that's important too, the buyer's name goes on the contract. The next thing we're gonna talk about, cash to keys name goes on the contract. Okay,
That's
so the buyer,
The buy now,
buy now, sell later,
Right.
yeah,
Yeah.
okay? Yes,
My
That's okay.
My pea brain's a little confused.
it's not a P-brain, there's a lot of stuff going on, so yeah,
So we don't get a pre-approval letter?
don't need it. So if you had a client coming in with cash, the one thing you would ask them for is proof of funds, right? You don't need a
So
pre-approval.
that's your proof of funds?
Exactly.
letter.
Right.
Yeah.
That number 2, right there.
Yeah, but we also give you a statement from cash to keys showing $1 million in the account.
Okay, so the deposit, let's say they're putting down 10 grand
Mhm.
on a house. Lou Tavano's office gets a certain percentage of that?
No, if they're putting their earnest money deposit, so let's say they're buying a $400,000 house, they may give a deposit of 8 grand, or 4 grand, it's 1.5%. So instead they give 4 or 5 grand to the seller, 2% is going to go to Tavano's office
And what's the purpose of that?
because we don't know if we're going to go cash or if we're going to go with the mortgage. All right, so it's 2 different closings.
You're shaking
Okay.
your head, yes. I'm
Yeah.
not following that.
What's that? The deposit?
The additional deposit.
Because it's a deposit that, first of all, it's a deposit because we're taking $400,000, putting it in their name. That deposit that he's holding is basically a deposit on that money. Okay? When you close the loan, both deposits are really, so it's the same earnest money deposit, you're just breaking it up to 2 places. You're giving one to the seller like you normally do, and then you're giving the second deposit to Lou.
But in the contract, it states $5,000.
That's all you have to worry about is what's going to the seller.
And then this extra deposit going to the attorney is just another deposit. Where is it written at?
It'll be on on the other addendum. Yep, absolutely.
That's
Yeah.
it, okay.
Yeah,
So
and it'll also tell you on there that they're fully refundable.
So
Okay.
is the 5,000 from the buyer, is that their own money or is that your money?
You mean the deposit?
Buyer's
Buyer's.
choice.
The
Yeah.
deposit.
But you know what? You bring up a good point because I had a couple that was moving up from Florida. All their money was in equity. They didn't have a lot of cash, so their parents gave them a gift. They just wired the funds into Lou's account. Now that money, if we're not going to use it in transaction, they can just give it back to them, or we had them sign a gift letter just in case. But that deposit that had to be made in order for us to hold up the funds.
And is that a conversation you have?
Yes.
About the 2 splits of deposit? Okay.
Yeah,
Yeah,
and
we
then
don't, we don't have to really worry
Right.
too much
Okay.
Yeah.
about that. They're gonna be, that's his department.
And-
So
and-
don't get too stressed out.
but going back to Mary Beth's, Mary Beth, right?
Laura about
Laura Beth, I'm sorry.
LB.
I had a Beth wrong.
Everyone
I got you. It's so offended.
Don't leave me, don't let her out.
Now everybody does that. That's why I go with LV.
Yeah, LV.
But that's the conversation initially up front that we do the Zoom meeting on, and then the home purchase coordinator actually goes over the form and walks them through everything, so that they understand what they're
Because it
doing.
is a little bit more technical, but it has to be a little bit more technical to get to get this.
Yeah, right,
And you said this is only conventional and BA.
right. FHA's pending, but you know what? Dealing with FHA is like turning an aircraft carrier around. Their holdup right now on this, because if we got FHA, it would be, I mean, it'd be huge.
Right.
Their holdup is the flip rule, right? Because if we buy the house, so that 90-day thing, they can't get to the house. Even though we're selling and buying at the same price, they can't get around it. So they're probably, we've been working with them for 2 years on this thing. Maybe late fall this year. I think it's going to happen, but you'll see it won't be a traditional FHA. You're going to have lower debt ratios, and you're going to have probably better credit scores. You're not going to be the ones with like the 56% ratio and the 580 FICO scores. They won't be doing those. But minimum scores on these are like 620, 640. Okay. The other thing too is if you have a client, this is another reason to get them approved up front. If you have somebody that's right on the border, we do some minor credit repairs. When I say minor, I could just look at somebody's credit report and say, hey, look, if you pay down these 3 credit cards right now, you go from 640 to 700. Big difference in rates. Big difference in cost.
Do you do the rapid?
Rapid rescores. You know what the nice thing about it? We're not a credit reporting agency, so we can't charge a client.
Nice.
It's $5,000 to $1,000 benefit that they get for zero. We pay it.
Right.
But if we help you get a client approved, that's another deal we can close. And the reason behind we're doing this, we want the mortgages. We want the loans. That we're not making money on that. So going back to the hard money lenders, there's another company called Ribbon down south that does this. They charge extra fees on everything. We're not doing that. Okay?
So if you're gonna resell the property at the same price, aren't you in effect losing money?
Mm-hmm. That's why it doesn't happen very often.
Mortgages.
Every time, and when we get into buy now, sell later, it's going to even really kind of say, wow, what the heck are they doing this for? Every time we buy a property, we pay all the closing costs. So we lose money on every one of those, right? So you have to look
Every
at
time you have to come in and buy when the buyer does something
So
else.
right.
or
So
left.
if Cash the Keys is buying the property, they pay the closing costs, and they're losing money on that deal. But again, volume. There's an old saying in mortgages that volume cures all ills, right? So the more volume that we can get, and like I said, this is just taken off like wildfire. My business has tripled since January. So, but the more people I can tell about this, whether you guys do it with your buyers or you're on the listing side, it's going to benefit us. You go to the next one. Okay. When the bid, get your offer accepted. See, client will have. Here's the cash offer fee they were talking about. And then if you want home inspections, so anything. So the only contracts that require specific items are VA, right? You have to have water tests, you have to have termite test, septic test. But if you have conventional and you're doing waiving the inspections or you're doing it for their information only, that's fine. Okay. You want to build in appraisal gaps? That's fine. Okay. Did we put one on yours, Carl? That we?
I don't think so.
Okay. So appraisal gaps are a big thing right now, right? So if we have a client bidding $350 and they said, hey, we'll go $20,000, we'll build in a $20,000 appraisal gap. All we have to do is verify they have the funds to do it, and then you can build any appraisal gap. Okay. And then some contracts are written, hey, we're offering $250, but we're willing to go up to $320, right? So there's a different number. All right, go to the next one. All right, keep going. All right, so and these numbers are a little bit old. I'm going to give you updated figures on it. So the deposit cash offer fee is wired to the title company. That's not a hard number, right? They're saying 48 hours. Some people will drive to lose office or drop it off. Some people will wire it into his account. Some people get a bank check. Some people, if they're out of state, it takes them a little bit longer. If they got to get a gift, we just call them up and say, hey, listen, we're going to work with you on this, okay? And VA is actually is only 0.5% for the earnest money deposit and 1.5% for the cash offer fee. Okay, vacation homes are a little bit higher, right? A little bit riskier. That's what the deposits are in there. Okay.
Can I ask
Yeah, sure.
I know we probably asked the same question, but the 2% cash offer fee, does that go back to the buyer at closing to
Yes.
be used towards? Okay.
Yes. Yeah. It's you know what? It's just like your earnest money deposit. We're just breaking it up.
Okay.
Yeah, that's all. Okay, go ahead. Okay, so that's cash offer. All right? So you guys ready to take the quiz? Just want to make sure you're still pat.
Yeah.
So we're going to go
Does
through.
everybody get it though?
I believe.
Fully underwritten loan, just based upon the appraisal. They're cash buyers. Use the addendum. The deposit's broken up. Don't worry about that. That's it.
No matter what, that deposit is still whole. So if it's $10,000 that you're putting down, you break it up on the backside. It's not the buyer
Exactly.
paying 10,000
Some goes to
plus
the listing
2%.
agency, some goes to Lou.
So they're not paying that extra 2% then.
You're not paying it, it's just a deposit.
Correct.
Yeah.
It's just all the deposit.
But you know what? Another good point. So it depends on if it makes a difference, because it does make a difference what the deposit is when you're negotiating a contract, right?
Right.
If you're giving $1,000 as opposed to $10,000, and then we got to talk to the buyers to make sure that they have the funds to do that. If the seller wants 10 grand and we're doing 2% over here, maybe we got 8 grand here and 10 grand there. It's $18,000. You got to make sure we know where the money's coming from. If it has to be a gift, they take an advance on the 401k, whatever. We'll work with them on that and help them. So that goes back to that 48 hours. I had somebody, it took them 10 days to get it in. But you know what? We're going to work with them.
But we should be preparing the buyers for
Exactly.
a second deposit, whether it's going to, you know what I
That's my
mean? Because,
question,
right,
yeah.
because they may only have $10,000, so then we have to
Right.
write the contract at 7.5.
But are we preparing them or is Mark preparing them?
We are.
Well, we can't even write that offer though if they can't.
Not our business.
All right.
It's out of our.
No, but you know what? But you know what? I should change that. We're actually both working with
Yeah.
them.
Right, right.
Yeah.
Just
But
because the buyers could be like, wait a second, I don't have an extra $5 grand.
Yes.
Yeah.
Yeah.
But you'll know
Cover
all
you.
of that up front in
Right.
the approval process. You know what I'm saying?
Oh,
Like
yeah.
before you go out and looking at things and you're saying like, okay, we know how much of a deposit we can do,
Okay.
right? So if
Right.
you're negotiating and the seller says, no, we want a $50,000 deposit, it's the same thing. It's like, no, we can't do that.
Okay, well,
Right.
what about if they do default too, with that extra deposit, like when you're negotiating with the seller, say, well, we're putting the extra 2% over here, and the buyer does default.
But the seller won't know any of that.
No,
You know what I'm
seller's not
saying?
involved
Like,
with that.
The contract is the contract, but
Yeah.
you just have to like.
But if
know-
you explain to the seller it's cash and keys and there is a 2% going back to the, so if the buyer does default, that's gonna go back to the, like, they lose their deposit that's to the seller, that 2% is still gonna go back to them, not the seller.
No, it's
Right.
so that's a good point. So
the buyer.
this is premised on two things: closing with Tavano's office and closing with us. Okay? They're not going to get the deal if they. So here's an argument I have with a client from Massachusetts. Mark, I love the program, but I could go to U.S. Bank right now and get 6% and 0%. I go, I'm telling you right now, it doesn't exist. I actually researched it. He said, no, the guy's giving me a special deal. I said, okay. I had them all approved. All right, buying a house in Marlboro, beautiful house in Marlboro. And I said, okay. He said, I thank you for your time. Very pleasant guy. Guess what? Didn't get the offer. And one of his offers out there was one of the top ones, and guess where he lost it to? One of my offers, cash to keys. Now, I can't disclose who's putting offers on what, and I can't disclose exactly what, I don't even know what the final price was until we got the contract back. But he called me up and said, Mark, you know what, I screwed up. I said, the offer's not gonna get you the house. I mean, the rate's not gonna get you the house, okay? Our rates are good. I mean, he was at 6% and 0. I think we were like at 6.25 or 6, which was realistically lined up with everybody in the market. And I'm going to talk to you about rates later because we do some pretty cool things with that. But that's not going to get the offer. And that's the argument that I had with that client. But he was just like, you know what? I can't pass this up. I go, but you don't have it. They're telling you you're going to get it if you get the house. So that's something that your clients may bring up too. So, all right, buy now, sell later. All right. We can go to the next one. This is a marketing piece that you can see. We can co-brand with you. So this is a great piece that you can actually share with your clients. Jasmine will take care of every one of you. They'll get your beautiful pictures up there, all your contact information. We'll put it in PDFs. We'll also put it in JPEG so you can post it online. We have a video that we'll try to play it today if we can. Have you guys that you can actually use that. So this is information that when you're talking to clients or you're soliciting them to work with you, that you can actually have them, you can play for them and give them that information, okay? All right. So this is the contingency buster, all right? All right. Same process, starts off of the approval. Now, in between here, the approval and the welcome call, one thing that's different is as soon as I get the information from your client, I order a BPO, broker price opinion, from an independent third company. Right now, I think they're using Stewart. They will contact your agent. They're not going to solicit our agent. They're going to contact your client, and they're not going to solicit them. I'm going to tell you right now, they're not going to. If they ever did, they'd be gone. They're going to go in and give an independent estimate on the condition of the property and what we think what they can net out from the sale. That BPO will be much lower than what you'll sell the house for. It's going to be very conservative. I'll give you an idea. We had a deal in Oakland, California. Okay, we went in, did the BPO, came back. They estimated that she's going to net about $96,000. She sold the house. Her net was about almost $200,000. Okay, because the BPO is also going to be. They're going to subtract the mortgage amount, any mortgage on there, carrying costs for 6 months, and the potential if we have to buy the house back. The other thing with
Do
the
they go to the property or is
Yes.
it all done here? Oh,
yeah,
really?
you actually go there.
And this is in addition to the appraisal.
Yes, this has nothing to. This is all this is. This is
what
on the
you're
current
listing.
house that they
Right.
currently own.
Oh,
On the
So
house
we
they
go
own.
in and do a CMA, land the listing presentation, and then when they get approved, then you send a BPO.
You may not or may not even have this house listed right now. You don't have to.
Right, but I'm saying like the preliminary
You're right.
steps.
Right. You could say, hey, listen, I talked to Mr. and Mrs. Smith. I want you to talk to them, Mark. We're talking about listing their house for $500,000. We go in, then maybe the BPO comes in at $450, right? And then it nets it out. We have a number to work with for the approval. That number is what we're going to use for cash for them to purchase the new house. Okay? And it's going to be very conservative. They're also going to tell Mr. and Mrs. Smith, if you don't sell your house in 6 months, we'll buy it. But we're buying it for 80% of the value. Okay? Do we ever want to buy it at market value? You know why? They would never list with you. Right?
Wait,
They-
that's 80% of the 450?
80% of whatever that number came in, whatever they got, the 450 that she
of the
came in with.
BPO,
Of
not
the BPO.
Not the list.
Not the list
price.
price.
Not what you say.
That's just, I mean, you never had to use that, knock on wood. But in the 2 years they've been doing this, they never had to do it. But in case we had to buy it back, we will. Okay? But the thing of it is, we give them 6 months to sell the house. Houses are not lasting 6 days. I mean, they're pretty much gone. But and again, she's looking at condition. She's looking at net value that's going to come out of that BPO. Okay? So now when we have that in there, we can get the thing approved. This process takes about 5 to 6 days. And the reason it takes a little bit longer is getting that BPO back. The BPO comes into our appraisal department, the appraiser goes through it, checks the comps, checks everything that they did on there, and then comes up with what they think the net figure is going to be. That's released to us, we release it to you and your client. Now we have that, we have the approval. They're approved for $500,000. Home purchase coordinator contacts you, contacts the client, everything looks good. Go to look for the property, okay? They can list the house now, they can list the house here, they can list the house anytime they want to, okay? They find the house, we get a copy of the MLS, looks at it, everything looks great, make the offer, offer's accepted. Now, the offer that you're making here is a cash offer. It is not contingent upon the sale of this property, okay? No mortgage contingency, no Hubbard clause. Now, if they have enough, the people from Oakland had enough money to put 20% down on the house in Glastonbury, I ran the numbers up front through DU and LP. You guys know what that is? It's Fannie Mae or Freddie Mac. It's a credit approval. We run them up front on every deal to determine whether or not we get an appraisal waiver. So now we have a client, no appraisal, no mortgage contingency, no Hubbard clause. Waived their inspections. Went 20 grand over asking price. Got the house.
Do they have to be able to carry both?
No.
In order to approve for this?
That's why we,
So there's no contingency that they have to sell their house?
no.
So what if they're like, all right, I don't want to sell my house?
Well, they have to sell within 6 months.
So is it, okay. So
But it's
there's
not a
time
contingency, there's not a
frame.
contingency
It's
on
not in the
contract.
offer, but there still is a time
Yeah.
frame that they have to.
Either that or we're gonna buy it from them for 80%.
But
Got
if
it.
they buy their house and they still hadn't sold their house, who covers both mortgages?
Great question. They buy the house, they secure it. Cash or Keys buys the house. Okay, so Mr. and Mrs. Smith,
Before
moves
the
in.
6 months is up,
yeah,
because we bought a house.
right. Cash or Keys, they said, okay, let me give you an example. People from Florida, right? He was relocating to Connecticut because of that job. He had a job change. He had to be in a house by the middle of March. Found a house, closed on it with Cash or Keys. He moved his whole family up here. now is selling his property in Florida. While he's living in this property, he's going to be paying carrying costs to Cash to Keys in the form of 0.065% of whatever the sales price is. We'll give you this formula. So it's a daily rental accruement. We're not going to charge them a payment here while they're still paying their own mortgage. That's the difference between the hard money lender, Ribbon, and a lot of other companies. They whack them with both. So now there's no benefit because they're carrying both loans. So this just accrues for whatever number of days he's there. Okay? So if he's there for 14 days and it's $1,500, when he buys the house back from Cash to Keys, he pays the rent, the proceeds of his house. That's why they do the 6-month rental accruement. They know that he's going to have enough money because part of the BPO is they figured out worst case scenario. If he carried this for 6 months, he'd have enough money from here plus what he had left over. Okay? So they take everything worst case scenario. You're confused.
That's our middle.
Listen, I got a lot of things going on here.
So, Cash to Keys buys the house, they pay their mortgage on their current home until
Right.
that's sold. They pay 0.065% to Cash to Keys.
It accrues though. They're not paying it out of pocket.
They pay for it when they sell their house.
Exactly.
So they're only paying their mortgage, nothing here, and that 0.65% is off of what figure?
Sales price.
Okay.
So the guy from Florida, he figured it out because he's a pretty smart guy. He said the difference between his rental and what he would be paying for a regular mortgage, the difference was like $100. Okay, it wasn't much difference because he had to hold it for a long time because this guy, we did his loan, he had indicated to us that he had a short sale. Okay, there's a big difference between a short sale and a foreclosure, right? Short sale, the waiting period is 4 years. Foreclosure, the waiting period is 7 years. Come to find out, we had Scott McEwen did a title search on the old property. It was a foreclosure. But what did Cash to Keys do up here? What did they guarantee?
That they'll buy the house.
That they're going to buy the house. We bought the house. I can't get him a conventional loan. He's got to wait a whole another year. So now what we did is we said, okay, when you go to buy it back, and again, going back to the FHA issue, right? We had to wait 90 days. He's renting this for 90 days. On the 91st day, he's getting an FHA loan buying it back from us. Because FHA will do it in 4 years, conventional, 7 years on foreclosure.
And can you write that loan?
Yep.
The FHA?
Only on the buyback.
Right.
Yeah. And they don't do it as part of the program. It's because listen, who made the mistake here? Wasn't the client.
No, it was AnnieMac.
It was AnnieMac. So AnnieMac's going to honor what they said, and they're going to close it. So they're buying it back from them. Go ahead, the next slide.
Wait, so who's paying the mortgage, the original mortgage? Like
Client. So Mr. Smith's here, right?
Yeah,
Still making his mortgage payment.
and then when he buys,
When he's moved into the property, the cost for the new property is just being accrued. He's still paying that mortgage until it closes, till he sells it.
okay.
Okay. And I'm going to give you a couple different scenarios how to work around this. Go ahead. All right, hit the next one. All right. So you can list their property anytime you want to through this whole process. Okay. One of the things that you got to understand is when this. Go back to that chart real quick. All right. When they make the offer on the house and the house gets accepted, to me, I would say, hey, get the house on the market. I'll give you another example, and I'm going to use Denise Webster again because we've done a lot with her. The same deal with Pam Moriarty was a buy now, sell later. So she got the offer, got it accepted. The client, next day, put the house on the market. We did an open house. It was in Manchester. It was a beautiful day like today. We had like 60 people show up. I was there with my little laptop. I did about 10 cash offer approvals while I was there. Gave them to the clients, gave them to their agents. They went back Monday, Tuesday, they started putting offers in on the property. We had 3 that were really, really good. The seller of the property went back and said, hey, listen, we're closing November 15th on my house in Ellington. Can you close on November 15th? They said yes. Cash offer approval, right? No mortgage contingency. They accepted it because the price was good. Now they're going to close on that in the morning, and they're going to close on the purchase, but they don't need Cash to Keys to buy the house anymore. So the rental goes away. And the other thing about when Cash to Keys buys, the other only expense that they have is the conveyance tax. What's the conveyance tax in Connecticut right now? 1%, right? It's 3/4 to the town, or 3/4 to the state, 1/4 to the town. So if Cash and Keys buys the property, when the client buys it back from us, the only fees that they have additional would be the rental accruement and the conveyance tax. Okay? But if you can line up the two closings, you can avoid that. Now, when Cash and Keys buys it, it's a big deal because we have a lot of people that are using this that are relocating either to Connecticut or out of Connecticut. So I had a client in North Carolina, one of the first ones I did, bought a house in Avon, and we were against 20 offers. We got our offer accepted, but we had to close in 2 weeks. They didn't have their house in North Carolina ready to sell. We got Cash and Keys, went to the closing table, they closed it. The realtor stopped by, picked up the keys, dropped it off to clients. They moved all of their stuff. They had dogs, they had little babies, so they wanted the house in North Carolina cleaned up before they put it on the market. So we had about 3 weeks between the time that they bought it and the time that they actually sold and closed it. And they paid the 3 weeks of rent. And right before closing, they were supposed to go to Tavano's office, and guess what happened? It came down with COVID. Is that their fault? No. They can't close for another 10 days. We did not close. We did not charge them the additional rent. Not their fault. So this is flexible. They'll work with you on stuff. Right? They're not going to be hard, true. And again, every deal is different. Right? Every deal in real estate is different. But the nice thing about it was when they came back in, they were so appreciative that we didn't charge them that 10 days. Actually, they did a big thing. They saw it on Facebook. We do a lot of postings on Facebook. And anyways, it was on there. They did this huge thing, had pictures of the house and their cats and everything. It was kind of cool. So, but anyway, so you can list that property anytime you want to. In a traditional deal, when you have multiple deals lined up and you have the old days with the Hubbard clause and whatnot, you have the people buying the house and they have to sell the house. What happens when the people buying the first house falls apart? Everything tumbles, right? It doesn't happen here, right? Because these people can still close. That's one of the biggest differences. And plus, you don't have the Hubbard clause on there. All right, that's the beauty of it. So even if you had them lined up, let's say Mag, the deal that I had in Ellington, if her buyer for some reason lost his job or decided to pull out or whatever, I mean, Cash and Keys could still buy her house. They probably would, so you still get the proceeds. But if for some reason they pulled out and didn't do it, we're still closing the deal. Either way, it's closing. That's the biggest difference. Is it's like an insurance policy. It's going to happen. Okay. How am I doing? Am I doing okay? Okay. So there's the accrual and the rent. And so this piece is a little bit more complicated. So what we need to do is we need to tell the clients that, hey, you're buying a house in a $400,000 price range. Potentially your daily rent could be X. We tell them that here. We don't wait till the end and tell them. We want to make sure that we're totally transparent on any potential fees that they can have.
But if you lean on this as just not being a Hubbard and still try to close them the same time, that doesn't even come into play.
Right.
I'm just, just to not be a Hubbard on the market not be, to be cash to the market.
Yes.
Because we can kind of line everything up. I mean, depending, right? Like
Right.
if we list their home, I'm just saying we have more ability to do that
Yes.
than getting a contractual as a contingency.
And you may say to me, Mark, hey, listen, this house right here, it's okay, it's livable, but it needs, I could sell it for a lot more if I could get them out of the house, right?
Right.
That could make a difference. Or to your point, as soon as the offer is accepted, and if the people on that end have to wait a couple, 2-3 weeks, it gives you time to get this one done.
Right.
And if your traditional lender can't get it done in time, you call us, we'll get it done.
Right.
I will tell you, I got a really cool scenario right now. I had a buy now, sell later, okay? Buying another property, and they wanted to close the end of September. And they wanted to close in the end of September because they needed time to find another house. Because they think, I gotta sell this house before I can buy a new one. I talked to their agent, it took me lots of phone calls, but I finally got to talk to them. We got them approved for buy now, sell later, okay? So now I have a buy now, sell later, a buy now, sell later. Then the people buying their house got cash offer approved. So I had the cash offer, buy now, sell later, buy now, sell later. So you can actually, and the whole thing, what it did, it took us from closing in September to closing the end of June. I mean, I don't know about you, but I'd like to get paid in June as opposed to September, right? So it's really a cool program that you can do a lot of things with. This program right here is not just for buyers, This is great listing presentation.
Definitely.
Joe Panadiaco is going to talk to you about. So we have an old saying in the mortgage industry. It's called "marry the home, date the rate," right? Marry the home, date the rate, because a lot of people are telling you, "Oh, I would buy a house if the rates were at 4." Well, they're going to get to 4, but they're not going to get to 4 anytime soon. So if you find the right house, we're saying buy the house now, and then you'll date the rate because you'll get to that rate at some point. We're telling the sellers who are paying 3% of their mortgage, right? But they hate their house. Hate the house, love the rate. So that's their holdup, is they don't want to sell their house. And they may tell you this too, I got a 3% interest rate, but this house is too small. I don't like the windows. I don't like the location. Whatever it is, I hate the house, love the rate. Those are people that we got to try to convince that, hey, we got something for you down the road. That's a listing presentation that they're actually going to put together to give to you guys, right? Because again, more houses that you can list and sell helps everybody, right? It stimulates the economy. All right, you can go to the next one. I think we're just about done. Well, let's go back real quick. Sorry, go all the way to the end. So when they secure the house and they close on the property, when Cash the Keys buys it, you could wait until they actually closed on it and then list the property. But it has to be within 14 days of them Cash the Keys buying the property. That's kind of the deadline. Most people do it before that. We've done a lot of Floridas to Connecticut with Pratt and Whitney. So some of those people are waiting. We'll wait till the end because they want all their stuff out of there to sell the house. Okay? And we have 6 months, obviously, to sell the old property.
Is there any flexibility on the 14 days?
Not really. Yeah. Because really, they have all this time here.
Yeah.
Yeah, and the sooner they list it, the less accrued rent they'll pay. So
Absolutely.
it behooves them to list it like as quickly as possible. However, I do have a lot of sellers who need to get out.
Yeah.
Right.
They list it, so it's like move and clean.
Yeah. Or especially if they have animals, right? I mean, that's a whole other presentation that we do for, staging, how to take care of animals and get rid of orders and that kind of thing. So, okay, we can move on to the next one. All right. BPO we talked about. Cash the Keys will pay approximately 80% of the BPO value. That's the guarantee that they have on there, which really, we never want to be the best offer. We want you guys to be the best offer. And that's 9 times out of 10, that's how it works.
And you've never done that. Have they ever bought it for 80%?
No.
I was going to say, do you get pushback from people on that?
No.
No.
I get zero pushback.
Yeah, because in this market, they're like, yeah, we're going to sell it.
We had one, so the only pushback we get is, so when we order it, if they don't respond within a week or so, we get an email, like the guy that we talked about.
Yeah.
So, but we just talked to him yesterday. He
Okay.
just kind of put things on hold. Andrew?
Yeah.
Jasmine actually talked to him yesterday.
Yeah, exactly.
But again, I was notified that he didn't order the BPO,
Right.
because that's one of the first things I do.
Yeah.
And, if they don't want to do it, if they're on hold, that's fine.
Yeah.
I will tell you, I had an elderly lady. She was buying a condo. She had to be east of the river. I sat down with her. She just couldn't grasp this. And I met with her face to face. And again, I talk fast. And I go through, and I know this inside and out, so it's easy for me. She said, you know what? I'm not comfortable with it. I want to do my mortgage with you, Mark, but I don't want to do cash offer. I said, okay. Her agent, was like, but that's okay. She lost 2 deals. She came back to me and she says, Kayla's telling me I got to try this cash offer thing. She said, will you guarantee me, you send me an email guaranteeing me that there's no extra fees and that you're not going to rip me off? I said, absolutely. Absolutely. I'll send you an email. Her next offer, she won the deal. I went to a closing. We go to all the closings. We give them a little, you probably see my pictures out there. We give them a little welcome gift, whatever. And it's good, it's good for us to promote the program. But I said to her, are you glad you did it? She said, yeah. She gave me a big hug and homemade cookies. So that was worth it. So sweet. Okay, go on to the next one. Okay, and then we went through the process on this already. So that's, again, if somebody's question here, Cash Key always refunds 100% of the fees when the buyer closes with AnnieMac and our title insurance company. So that's Lou Tabano, right? That's our attorney here. All right. Okay, I think we're almost to the end. Go ahead. Okay, so the deposits, we went over this. I will tell you the buy now, sell later fee. The deposit now is 2.5%. So we'll give you new information on that. And then the accruement on here is at 007. It's actually 0.6. It's 0.0065% is what the rental accrual is. Okay, so some of these things are old. Okay, the next one. Okay, properties. All right, so again, single families or condominiums are fine. Condos, if you're selling them or buying them, get to us early because we want to make sure they're warrantable. Okay, because some of the condos are not warrantable anymore. We still have investors that'll do non-warrantable condos, but what we do is we do the questionnaires up front. And again, it doesn't cost you anything. All right, 10 acres or less. Had a deal in, I believe it was in Hampton, 14-acre parcel. All right, they bought it for 10. I think they bought it as a 10-acre parcel, and then they subdivided it. We tried to do it on another deal. We couldn't get it to work. But this one, they actually subdivided. They bought the 4 acres. It was like wetland. They bought it for like $5 or something. They did it separately, but Loop broke it up for them. But average condition or better. No major repairs needed on the property. Make sure it's habitable. External opulence. You know, obviously a house sitting next to Pratt & Whitney is going to be a tough sell. So that may not work. And it has to be in the approved state. So if you guys are licensed in Mass, we're doing this in 45 states right now. So it went from just little New Jersey to 45 states in less than a year. Okay? All right. And again, this is all kinds of different marketing. This is actually a social media post that you can fill in your own thing on. So we have social media. We have flyers. We can put your names and stuff on. We have a lot of stuff, and it grows every day. We actually have a Facebook group. Are you in a Facebook group? Okay, you are? Okay, so we'll invite you to join and that's a great interaction because it has other agents from around the country, all right? And those people are telling you what they're using in Colorado or they're using in Florida to promote this program, all right? And this is another flyer or another social media post, okay? And all kinds of stuff. Keep going. All right. Text, if you want to do text messages, we give you information, you just put it in your own words. Okay, so we have a lot of scripts that we can share with you. And these are things that we've got from other agents. Okay? All right. So that's a QR code for your quiz, which I'll send you. Before I get in any questions, a couple of things about interest rates. Okay? Interest rates follow inflation. Okay, so everybody that's a naysayer thinks the rates are going to go up. They're not going to go up. They're going to go down. In fact, they've gone down the last 2 days. They're going to continue to go down. So what do you tell your buyer when he goes out and makes an offer on a house today? Okay? Marry the home, date the rate. Remember that one. If your client locks their rate in today, so if you go under contract today, the first thing that we do is we lock or cap your rate. So let's say the rate's 6.5. Okay? They're locked, they're capped at 6.5. If their credit improves, rate goes lower. If the market improves, if the market actually drops down, we allow them to float down one time at no cost. Okay, you can go from 6.5 to 6.25, no cost. You're all going to get a flyer that's co-branded with us. It's called the Purchase Protection Program because we know rates are going to be lower in the fall than they are now. They're actually talking about rates in the mid-5s by July. End of the year, maybe high 4s. So the client that you close on today, right? We're going to refinance them, and we're not going to charge them any lender fees. We're putting your name on that. So when they get that award, when they get that benefit on there, Tavano's office is also going to discount their closing cost. So that's another way for you to touch those clients and say, look, you know what? I hooked you up with this cash to keys things. You found the house. Now we got the rate you want. And you know what? It's because you took the initiative to refer them to us. That's another way for you to get more business from those guys. There's nothing like referral business. The more times you can touch those guys, the more opportunity you have for them to refer to you. So we're taking a big hit on the refis, but again, we're a purchase money lender. So we made a decision, we're going to waive the lender fee, which is about $2,000. Some cases $2,500, but it's a pretty significant amount of money that we're taking off their closing cost. All right?
Awesome.
Nice.
How'd I do? You all right?
Great.
Yeah.
Questions?
Right.
Scenarios?
So I know with my client, you sent me that app.
Yeah, yes.
So they do have an app where you can watch what's going on, but we can't seem to get my plan on it though.
We're going to actually send it. So listen, we have a mobile app that's fantastic. There is sometimes when it gets shared, sometimes people have a hard time getting onto it. but it's really, they have to put their email in there first to get it started. So what happens if I shared it with Leah? I actually sent it to her email and I sent it to her phone, so I text it to them, right? Sometimes when they go through the email, they don't realize they have to put their email in again. But we'll definitely get it in there. But it's really cool because you can e-sign on it, you can upload documents on it. Every time something goes on with that deal, whether the appraisal, the approval, whatever, you get a notification. Saves a phone call, automatically comes out to you. Markets to you anytime that the client goes in there and looks at something, it basically notifies you. You can go in there, run your own scenarios. So if you're out with a client and they're saying, hey, I know you're approved for 400, but we're looking at 350, this is the taxes, put the numbers in, you know what the rate is, and you just plug it in there, you can actually run your own payments. So it's a pretty cool thing. Do it on your phone, do it on your laptop. And we like it because it makes it easier for us to stay in contact with the client, keep you guys updated, loose offices on it. So every client that we have, pretty much everybody's coming in now is jumping on the app as we send it over to them. Our office is right in Vernon. You guys know where Ryan's Deli is? Mm-hmm. Yeah, we're right next to Ryan's Deli. So if you're over there grabbing a Reuben, stop in and see us. We're about to move down the street though. We're moving into Don Fish's office. We're getting some smaller space there because our space is too big. We had enough room for like 15, 20 people, but almost everybody's working from home now. So we're just getting it smaller, but we're staying in Vernon. So if your client needs to sit down and go face to face, we do it all the time. We can come down here to do face-to-face meetings because there are those people that still want to do that. They struggle with the technology, and we're I'm old school. I'm old, so I don't mind sitting down and going over things with them. So, yes.
You said the credit was 620, 640 for the cash to keys?
620 for the cash offer, 640 for the buy now, sell later.
620 and 640.
Yeah, and you know what? You bring up another good point. So when we're looking at debt to income ratios, okay, the cash offer program is very, very flexible. You could go up to like 50%. Okay, so if we can get the loan approved through Fannie and Freddie, we'll approve it through cash offer. The buy now, sell later, they're going to be a little bit more tighter on the debt ratios. And the reason for that is because we want to make sure that they're going to have enough money to buy this property. So that one's is capped at 43% right now. What happens is with a lot of clients that if they're at 45 or 46, I'll talk to them and say, hey, look, you're going to get $100,000. If you're going to pay rather than put more money down, get rid of some of your credit cards, right? So you have good debt, bad debt. Bad debt is, and I know we all have them, but you're paying 18, 20% on a revolving credit card debt, right? If you can get that down and save yourself $300-400 a month, rather than putting another $10,000 that only saves you $100 a month, it's better off using it over here. So we do a lot of that stuff up front. So we know that when we're going into this thing, we do a lot of counseling. We have a lot of marketing information that we have through MBS Highway that we can co-brand with you guys. And we can actually send them out to say, hey, listen, here's a debt consolidation plan. Here's a plan to get your credit straightened out. We have all this stuff, okay? It's all co-branded.
One more question.
Yes, absolutely.
I'm curious about the 10-acre max. I have a buyer that wants at least 10 acres to hunt.
Yep.
If it comes in at 9.5,
Fine.
you can't hunt on it.
Oh, you can't? Okay.
But if he comes in at 10.5, you can't do the loan.
Right. We can do a loan. We just can't do. Yeah. You could subdivide it, which is a little bit.
But you'd have to do that prior to closing.
Right.
But you could split it right at 10.
Yeah.
Right.
Or does it need to be 9.9?
No, give 10. Yeah.
So you still get the hunting.
But that would.
So what he was just saying was a 14 acre and they
Right.
split it 10 and 4.
But what's the time, the ETA on that?
Yeah, that's where you run into a problem.
Yeah.
That was the issue for my people.
Yeah. Oh, we did talk. That was your client. Yeah. Yeah.
Yeah, it was over time. And at that time, I think we didn't know that ahead of time, and they had a particular parcel in mind, so it didn't work out. But in the future,
Yes.
Yes.
And it's funny because after that happened, we had another one. I don't know if it was. I may have been. Was yours 14?
Maybe.
Yeah. So maybe it was 10 and 2. I don't know, but. I leaned on Lou in his office, and I think Scott went down to the town hall because that was out in. That could have been Hampton or Chaplin. Was it okay? Maybe this was Chaplin. I know it was out that way somewhere, and they actually went down and they figured out how to do this, and they just had a little bit longer closing, but the house had also been on the market for a while, so they worked it out. So
Couldn't they like purchase it at, like, let's say it was 15 acres, couldn't they purchase it at 10 acres with the house, blah, 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 and then purchase the 5 acres after they close everything
I
separately?
think they have to divide it because it's all on one deed.
Yeah.
Yeah, that was the problem. Yeah. So along with this, the other thing you're going to run into with your clients is sometimes they can't find the right property. Do you guys do any renovations, lending at all? Have you done any of those loans?
Yeah.
We do a ton of them. The renovation program that we have, VA does them. I don't know if you knew that, right? VA will go up to 20% or $20,000 over the sales price. You can do obviously the FHA, the old 203Ks, and then we're actually doing the home style, which is the conventional renovation program. You can do them on purchase, and you can also do them on single family investor deals. So if you have somebody buying investment property, single families, we can do renovation loans on it. The great thing about renovation loans, if they buy the house for 150, they put 30 grand into it, they're in there for 180, they use the after improved value, right? So they may be into it for 180, that may appraise at 200, 225. We have people walking into huge equity positions using this program. And it's a great deal, so, yes.
Does the cash offer work for investors that buy single families?
No.
Owner
Occupied.
Oh,
Or owner occupied or second homes. So if you have somebody here that wants to buy a house in Florida, we can do that.
It has to be out of state?
No,
Does it
just has to be a second home.
Does it have to be a certain radius from?
It's got to make sense. Yeah, like I had a guy in Florida said, I'm buying a house in Tequesta. He lived in Jupiter. It was like 10 minutes away. I'm like, I don't think so. Unless I had a golf course or something, right? You know, but if you have somebody that's maybe, I had a house in Vernon actually, or people in Ellington buying a house in Coventry. It was pretty, but we're buying it on the lake. That's different, right? It's lakefront. There's a reason that makes sense. But it's got to make sense if you're going to do it as a second home. There's a big difference between second homes and investment properties. Right, down payment, rates. Investment properties are tough right now, so.
So that brings up a good point. Is
Yep.
You don't just do this buy cash
Oh, no.
offer.
We do everything.
You do everything.
Yeah.
CHFA.
CHFA.
Oh, you do chatbot too?
Yeah.
Yep. They're full service.
First, and then we, if you have we do like self-employed barbers, okay? Self-employed guys really get kind of messed up, especially small business, right? You got your Schedule C guys or, S Corps or whatever. Those guys, it's hard for them because if they show truly what they make, they get creamed on taxes, right? So when we get these guys in here, they're not showing a lot of income. So we do, you guys ever heard of the bank statement program? Get 12 months or 24 months. Actually, the pricing on those loans is not bad. And again, anybody that refinance program, that actually you can use that all the way through 2024. Okay, so that discount on that we're waiving the lender fees. So I tell my clients all the time, you're at 6.5, rate goes down to 5.5, you refinance. Rate goes down to 4.5, you refinance again. I'm giving you the same deal.
Yeah, for those 2 years.
For those
No
2 years,
fees.
no fees.
Right, that's great.
It's a great deal.
Yeah.
For our buyer to say that to our buyers, like you could refinance with AnnieMac for up to 2 years, and they don't charge you anything.
Yeah, and getting these buyers off these rate conversations right now is so important.
It is.
Like, let's not talk about, you know what I mean? Like, you have a solution for that when it happens,
Yeah.
period. Because they're so fixated on that.
The guy from Boston, he lost a beautiful house, and the agent was just furious. We rushed him through to get him approved.
Yeah.
So let me tell you a deal. You know Mary Lou Kaufner, right?
Yeah.
So Mary Lou had a VA buyer. We've been working with this guy for 2 years, and he finally came about. Another guy was very reluctant on this program. Got him approved VA. All right. He's buying a $500,000 home in Stafford from Jody Cox, who was at Coldwell Banker. She's still a Coldwell Banker, I think. But anyways, she's a listing agent. I had just done the presentation for her and Lori Gabriel and a bunch of them up there, so she understood it. She said, Mark, is this that cash to keys thing? And I said, yes. This guy didn't have anything to sell, right? It's just a cash to key buyer, 100% financing VA, okay? Get the offer accepted, get the loan going through. The only thing I had to do is the price that he was offering on it is they built in an appraisal gap up to 550. Okay, offer price is 500. They would go as high as 550. Really wanted the house. I don't have an approval. It's Saturday afternoon. How many underwriters work on the weekends? Just about zero. Not mine. I have her cell phone number. I call her up and I said, Joanna, and they're a huge favor. Offer had to be presented by noon on Sunday. She goes, for God's sakes, Mark, I'm out shopping with my family. Can I wait? And I said, listen, tonight.
Real estate.
Yeah.
Yeah, seriously. Like,
I
okay.
said, Joanne, that's fine, you know. So I called Mary Lou, I called Jody up, I said, it's coming over. So she goes back and she sits down at her home. She gets me the approval, we send it over, we get the loan done. Bottom line, he gets the deal, loan closes in 2 weeks. How many VAs are closing in 2 weeks?
So you do cash offer VA.
Yes.
So any of your VA buyers.
Yeah, that's huge.
Because
If
VA's
you're
getting
gonna
screwed.
compete- Oh,
Yeah,
You can't even compete as a VA.
but now you can.
now you can. Because again, it's not going over as a VA, it's going over as a
It's
cash
cash,
deal.
It's
right,
cash.
exactly.
It's right now, they don't know it's a VA deal, okay? And then you just put that same, like, so you know on a VA deal, if you're going 100% financing, you gotta have certain tests, right? We tell you up
Yeah.
front, it's part of the contract.
Yeah.
And as long as those tests come in fine, you're good to go. This guy, everything came in fine, there was no issues on it. And at the very end, Jody called me up, she goes, Mark, was that a VA loan? I go, yeah, it was. She goes, holy cow. She
So
didn't
the
know.
only issue could run into with that is if the appraisal comes back with conditions, and then you do kind of have to backstep and present to the seller, hey, actually,
Right.
we need to paint a deck, or what, I'm just saying, so I think that
Yeah.
the,
Yeah.
the property needs to be pretty pristine
Yeah.
to like get that
Well,
through
it kind
without.
of needs to be anyways.
Right, but I'm just saying, that
Yeah.
would be your only backstep really, where
So-
then you have to review
Similar.
that.
And that goes back to us looking at the MLS up front.
Yeah.
Right, so we get a copy, but you're right, because there could be things out there, and we can't control the appraisers,
That's
right?
one thing,
Every
yeah.
appraiser is different.
And then you just don't want to be like one of those, then you've lost confidence with the listing agent if then you're turning, oh, well, actually we're VA.
Well, it's
Like, you
still,
know what I
but
mean?
it's still contingent upon the appraisal in
Yeah.
that addendum,
Yeah.
right? So
right.
you're just saying, like,
But still,
the
like,
appraiser has notated these things. We can't control.
Right, but
that.
like as a listing agent, but you're a
Yeah.
cash offer, why are they
Right.
notating VA
Right.
issues?
Yeah.
One of the biggest
Do you know what I
hang
mean? Like, I'm just saying that would be your only.
Yeah.
And as the buyer's
Yeah.
agent, I say, why does it doesn't matter. You need to fix it. So just do it.
Yeah, okay.
But
I think-
what about the VA addendum?
we get it signed in closing.
And
Really?
that's.
Oh, we get it signed, yeah, or we get it signed after the appraisal.
And what about the termite? Isn't the termite?
You have to have a termite.
Yeah, termite
But
well.
what is the seller responsible
Seller doesn't have to
for?
pay for it anymore.
No, they changed
Well,
that.
They changed it, yeah, they changed it, yeah.
I am on.
But I mean, listen, when Carl I started, the sellers used to have to pay a point on VA loans. Remember that? I know,
Yeah.
maybe I'm aging myself.
Yeah.
On a VA loan, it was always 1 point from the seller on a VA deal.
Wow.
Yeah, they changed a lot of that stuff.
If we're doing a VA cash to keys, they're 100% down. How do we structure like the deposits? Like the seller still wants to see earnest money.
Right.
And typically, oftentimes there may not be an awful lot of funds. So how do we as a buyer's agent present like a $1,000 earnest money that's,
Well, they're gonna need more than that for the closing, right? So if they're going cash to keys and they're going VA, even if they're getting 100% gift, in order to get approved, the money's gotta be in their account. So they would use that money for their deposit.
Okay.
Yeah, so they would put their
So
deposit
what
down.
kind of money needs to be approved? Like what cash?
You have to have sufficient funds to close. So in any mortgage, when you get a mortgage approved, you have to verify that you have, let's say you're putting 10% down and your closing costs are 15 grand. So let's say you need $25,000 in the account, we verify that it's there.
Okay.
So with the VA, even though there's no money down,
Right.
you still need the closing costs.
Right.
So they need to verify that.
Yeah,
down.
but with
Just to get
VA,
approved.
doesn't it get rolled into the mortgage, the closing costs?
No.
Closing cost credit, like if you were going to do a seller credit.
No.
Yeah, there's a lot of people think that, but they don't. No, closing costs on a VA are just like on a conventional loan. They're paid by the veteran or by a gift,
Or you write it into the contract.
or you write it in the
Right.
contract. Yeah.
To make it actually 100%.
But those
yeah,
are tough to
okay.
get too.
Yeah, no,
Yeah,
totally, absolutely. I get it. Okay, that makes sense.
so how do we, if it's a VA cash to keys,
Mhm.
on the first page of our contract, it's got, earnest money, first deposit, second deposit, or just one.
Yep.
And then at the bottom, let's say it's $9,000 that they need for all their closing costs. We would write $9,000.
No, it doesn't have to. You don't have to put it all in there. Only what you. So let's say you've negotiated with the seller. I'm going to give you $500 on the offer, and my additional deposit is only going to be $4,500. We're going to give you $5 grand.
Yeah.
That's all you need to put on. You got sales price, deposit, cash bringing the closing. Right? It's going to be the total amount.
So we don't have to have any of that, that the deposit goes back to the,
No, that's all part of the addendum, and that's part of the cash offer fee agreement that they sign with the client, because the deposit that they're giving Lou, again, it's discounted for the veterans, and it's refundable under, if you terminate the contract, or if you don't close, or it's credited toward the closing cost. So it's not additional fees, it's the same amount.
okay.
And we do a first responder discount. Veterans, police officers, fire department, any of those guys automatically get a half-point credit on to their closing costs. So,
That you pay.
we pay.
Nice.
Yes.
Just a question about, the buy now, pay later, or buy now.
Buy now, sell later.
Sell
Yep.
later, yeah. So I have a seller and you bring in your people to figure out what, the BPO is, and say it's 500,000.
Mhm.
And then you take 80% of that, so now there's 400,000, and is that the amount of the proof of funds?
No.
Good
So
question.
you get the $500,000 BPO.
Yeah.
They're subtracting whatever, if they have a mortgage. If they don't have a mortgage and it's not on there, we subtract what the estimated carrying cost would be for 6 months. That's if they had to rent it from us. We subtract that, and we use 80% of that. That's how they come up with the BPO number.
So the proof of funds is the 80% of those.
Well, it's not the proof of funds. It's just that's money that they can use for a down payment on their next house. So let's say that your
Okay.
clients had $100,000 net.
Yeah.
In their new house they're buying was for $400,000. We're getting them approved for a $300,000 mortgage. So we know they got $100,000 coming, even if it's after the fact. Okay.
Okay.
Yeah. And then the proof of funds is just from cash to keys, basically just saying, hey, you have $1 million in this account to cover this loan to the seller side, so they know this is a true cash deal that's going to close. Yeah. Yes.
Can you do two properties, selling two properties, they're buying one? So what I have is the daughter is buying a 55 and older for the parents to move into. She has a condo that she doesn't live in, they're going to be listing, their house is in Glastonbury. So both of them are selling their house to have cash to buy the 55 and older.
She's saying buy now.
Oh,
sell
so you're
two
selling.
later.
Buy now, sell later. Sorry.
2 for 1.
2 for 1.
I've never done that, but you know what? I don't know why not. I mean,
Right.
we're so the big thing is
They're in
they're
different town, like.
it doesn't matter.
Oh,
It could be in
okay.
different states.
Okay.
As long as it's an approved state. The bottom line is that Cash to Keys is buying that house up front because they have the collateral on the other properties. That's the reason that they're doing it, right? They feel comfortable about it. So if they have collateral and they look at both properties, you know what? We'll run it by Colleen at Cash to Keys and see if we can do
It's
it.
difficult because if one of the two deals falls apart, then they don't have the funds to go into the 55 and older
Right.
for her parents' home.
Worst case scenario, we say, look, which one are you paying the lowest mortgage payment on? Maybe we qualify you getting the
I
net
think one
from.
has no mortgage and one has a mortgage.
Yeah, so maybe we figure out, maybe they could qualify carrying the loan. So,
Okay.
because back then at Cash to Keys, you can do a cash offer without selling the property if you can carry both mortgages. So we look at all the different scenarios on that. That's a good one though, we gotta talk about that.
Yeah.
Yeah,
okay.
absolutely.
Cool. So these are good solutions. You know, back when I started 2006, 2007 at Prudential Connecticut Realty, and Connecticut Home Mortgage had the Jump Start program. And it was very successful for me because I had a lot of buyers who would get fully pre-approved. That was their cash offer, thing. And it was a good tool. So I think this is another good tool. I got a bunch of sellers who want to buy.
Right.
I gotta do something. So, which is why I wanted you to come in here.
Yeah, and honestly, guys,
It's huge.
this market is more about educating than it is anything else. Because people don't know what to do. And if they don't know what to do, they're not gonna do anything. So if you could go out there and you can say, hey, I got a solution, right? And again, people, when we walk out of here, hopefully everybody uses it, but I know that probably 5 or 6 people will just forget about it and won't use it. The ones that do use it and go out there and use it as a selling tool, like Carl was kind of mentioning, you're gonna get more listings. And listings like gold right now, right? That's really, and honestly, that's where everything starts. The problem with my industry, we're still focusing on interest rates and programs when we should be focusing on helping you guys get listings.
Right.
Listings are going to stimulate this economy. Listings are going to make this real estate thing go. So everybody's Can you tell I used to coach? I used to be a coach. So.
Yeah.
But listen, Joe Pianiaco was on our sales call this morning. Monday. He got me all fired up about this. He's like, "You guys are looking at the wrong thing. You got to help your realtors. If you're not helping your realtors, you're going to be out of business in 6 months."
Yep.
And people are dropping like flies, and on mortgage side.
Both sides.
Yeah, both sides too. Yeah.
No doubt about it.
Yep.
Cool.
Right.
Great job, Mark.
Thank you.
Good job.